All right, Bulls and Bears, how is everybody doing? What is happening? Hope you're well. Good evening or morning, depending on when you're watching this. This is another late night video for me. Back with another dose of economic reality, though, folks. Let's go ahead and get into it today. A lot to get caught up on. We have an investor out there, someone who says he predicted the dot-com crash. Looking back at the dot-com crash, early 2000s, I don't really remember that too well. It was kind of a long time ago to remember for me. But I don't remember reading that many people or seeing that many videos about people predicting that. But yet, after it happens, all of a sudden there's hundreds of different people that predicted it, kind of like the 2008 financial crisis, right? It wasn't very many people that predicted that crisis. I think Schiff and a couple other ones, but now you look back and you see these articles, and all of a sudden there's, again, hundreds of people that say they predicted it. So we'll see what this investor says. Does he make any sense? We're going to talk about that. The TikTok ban, it was upheld by the Supreme Court. There's going to be a big financial impact for a lot of individuals with that ban. We're going to talk about that. Also, we've got all you know what is going to be breaking loose in just a few days here. We've got January 20th, the incoming administration saying they're going to hit the ground running with all kinds, and it's so many different changes. I can't even keep up with them all, but we're going to talk about a few of those big changes and what could evolve from that with your money, my money, the economy, and more. Let's start right here, though. The stock market went up today. This is Friday, January 17th, 300 points. S&P 500 posts the best week since early November. So obviously there's no fear in the stock market. There's still this optimism out there that a lot of these different changes are going to be successful. And I would say that's very strange because we've never seen this type of change as far as the promises to make all these changes. We've got a completely revamped taxation system. What they're saying is the External Revenue Service now, which is going to be collecting tariffs. We'll see how that works. Will it cause inflation? Will it cause hyperinflation? Some people are saying hyperinflation, that these countries are not going to even think about paying these tariffs. And then consumers are so loaded up on debt, folks. How much more can people run up credit to purchase all these items and products, especially if the prices go up more, right? We already have the cost of living that's too high for most people. So we're going to get into that here in a little bit. But let's go ahead and start right here. The TikTok ban. Now, so many people make a living off social media, obviously YouTube, TikTok as well. Is this going to be a pin in the economic bubble, the everything bubble, right? All these people are going to lose their income. All right, imagine if an entire industry shut down. That's the size of something like TikTok. And then we got these other administration changes coming up where we're going to be getting rid of a lot of federal workers. We've never seen this. We've never seen the talk or the promise to do a massive firing or a mass firing of so many different federal workers. We're talking about tens of thousands all at once is what they're saying. So to me, this is a time of caution, but yet the stock market doesn't see any danger out there, no cause for concern. I'd be very interesting to see what's going to happen to the stock market in just a few days. I'm on the defensive. I'm in low positions. I've got stocks that I've held for many years because of the dividends, but I did sell off some more. I think a couple weeks ago I announced to you guys that I did lessen my position and the number of stocks and how much I'm invested in the markets right now. But we're going to get back into it in early, I'd say March, maybe early spring as far as investing. That's when I'm going to feel safe because I feel like between now and in just a few months, April, we're going to see a completely different world, right? And we'll get into a little bit what I mean about that here. But let's talk about this. Investor who predicted the dot-com crash issues chilling warning as another market storm brews. A billionaire investor who predicted the dot-com crash says he's on bubble watch as warning signs appear that have cropped up in the market. This is Howard Marks, one of the most respected value investors, pointed out cautionary signs in the stock market that could mean poor returns. Well, that doesn't sound too dire, poor returns. Quote, it shouldn't come as a surprise that the return of an investment significantly function on the price paid for it. For that reason, investors clearly shouldn't be indifferent to today's market valuation. I mean, stock market is I can't even think of a word of how overvalued it is. Let me just bring up a chart on this here. All right, big chart here, long-term. I like to go long-term charts here. 2000, right? For the dot-com bust. They thought this was a bubble, right? This is the S&P 500. They thought this was a bubble back then. Look at that. Went from 1,400 approximately down to where it bottomed out a couple years later, 2002 to 900. So from 14, a little under 1,500 to around 900 as the bottom. That was considered a bubble that went bust back then. Okay, financial crisis. Again, S&P 500 here, just over 1,500, bottomed out a couple years later. The lows there, 2009 at 7, just under 770. You get the picture? Folks, look at this. 2020, that should have been the bursting of the bubble. But what happened? They came in with massive helicopter money, stimmies, record money creation, aka printing, and look at this. And you're telling me now is not a time for caution when you just look at history, right? When you just look at history and the pullbacks, and unless they just inflate this thing into hyperinflation, they're going to have to really ramp up the money creation for this, folks, because we know that a lot of the money that's issued, quote, printed, it ends up in the stock market, right? Because it doesn't get handed out to the people at the bottom first, right? It gets handed out to the top first. We're talking about the banks, right? How much money they're piling into the banks to keep the banks functional. And we're going to see how it plays out, folks. But to me, this looks like a time to be cautious and not going all in. There's people going all in that they're so optimistic. That's something that I would really, really caution against. I don't give advice, but I would just caution against, jumping in with both feet right now. And I always have to say, if it were me, because I'm not giving you advice. I'm saying if it was me, if I were you, if you were me, I wouldn't be jumping in with both feet. I would be cautious. A lot of risks out there, folks. And here's how much money we're borrowing, aka printing, as a country. We've got a new debt ceiling being hit by as early as Tuesday. And they're starting the countdown clock. Another debt ceiling. It was just a couple months ago. We had the other debt ceiling. Now it's here again. And remember, the incoming administration, they were talking about getting rid of the debt ceiling. They wanted no limits in the amount of debt they can create. And you think that's going to be deflationary or inflationary? If someone wants to just create unlimited amounts, it's unlimited right now, but they want no obstacles, not even a discussion or a debt ceiling limit that they always pass, that they always increase. But they don't want even the discussion of, can we go further into debt? They want it to be no discussion, and rocket-fueled debt explosion is what it sounds like. And speaking of rocket-fueled, we had an Elon Musk jet breaking up and disrupted traffic in Miami. This Starship prototype has broken up during its 7th launch attempt, sending fiery debris streaking through the sky above the Caribbean and grounding nearby aircraft. Right? So where's the littering tickets, right? If I throw something out the window in front of a police officer, I'm going to get a littering ticket, but an entire rocket explodes. However, in an unexpected setback, SpaceX lost the upper portion of the Starship rocket, which exploded minutes after it blasted off after 8 minutes into the mission. Let's talk about interest rates, folks, and the central bank. The Fed's talking about holding rates steady as the incoming administration is stirring worries about inflation. Well, inflation's already been here. Prices are still going up. So if the people that were denying inflation are worried, then I think there's something really big to be concerned about here. This is how Reuters put it here. The Fed will hold interest rates steady on January 29th and resume cutting in March, according to a slim majority of economists polled by Reuters, as policymakers digest an expected barrage of new economic policies from Washington. Yeah, definitely. And I think they're going to be inflationary. Some of you actually disagreed with me down on this channel. You say it's going to be helping the cost of living or helping wages or both. We'll see. We'll see how it plays out. Again, I am not in the business of making predictions on something that This has never happened. We've never seen this many changes being implemented in a very short amount of time. The IMF out there is warning about the incoming administration's plans, right? So we've got a lot of big names out there saying be cautious, be careful. And I hope for the best here. I don't want anyone to fail. I don't want the country to fail. I don't want people to get crushed financially. But at the end of the day, something has to be done about the cost of living. And if they keep throwing money at the problem and something doesn't happen with the way money is loaned out, we're going to continue to see this inflation keep going and going and going. Investor sentiment nosedived as rates rise and rents fall. So we talked about this a couple reports ago, how rents have fallen now to the lowest in about 2.5 years, close to 3 years. Well, it's got real estate investors' sentiment nosediving. Now, I still think that investors are going to come in very heavy-handed and buy up as much real estate as possible. I think the word nosedive is kind of an overstatement. Over 35% of the investors surveyed viewed fourth quarter market conditions as being better or much better than they were in the previous year. And that's a huge drop from the previous year when 68% felt market conditions had improved. So 1/3 approximately of the investors surveyed says that they feel like the market conditions are better or much better. All right, let's move over to real estate. We know there's a huge slowdown in real estate. The number of transactions is so low that over, was it a million? Let me look up the number. It wasn't a million. It was a big number, but it wasn't a million. I can't find the article now. I'll get to that. I'll get to that in the next report. A lot of realtors are quitting. Let me just use the word a lot because of the volume. The volume is so low, and they're not making commission on the low number of transactions, and the commissions have dropped because there's no longer the 3% kind of unwritten rule that they used to have. 40,000 home purchases were called off in December, equal to 16% of homes that went under contract. So it also sounds like a lot of home buyers are being very cautious right now with all the changes that we're going to be seeing very, very soon. Pending home sales dropped 4.5% from November as mortgage rates jumped to the highest level in months. And we're seeing this basically divergence right now between the Fed funds rate and mortgage rates because investors, they see the inflation writing on the wall, so they're demanding higher yields, and the 10-year yield is basically what moves the mortgage rates, not the Fed funds rate. So if this keeps up, folks, it's going to be another negative on the economy, or a positive, depending how you look at it. It could make things more affordable if we see this housing bubble start to deflate, but a lot of other inflationary forces, folks. We've never seen anything like this. We're just a few days away. What do you guys think about this? We're going to make this a bit of a shorter one today. We're going to wrap it up. Probably hear my voice. I had 4 conference calls today, and my voice is about gone. So I'm going to wrap this up. See you this weekend. Please make sure you're subscribed. As always, keep stacking. Bye for now. We've got a lot of other news to get into this weekend. Big love. Bye for now. Peace.